Yeah, the next question is question number 3. From the following particulars, find the most profitable product mix and prepare a statement of profitability of that product mix. Product mix means now we are dealing with combination of different types of products. So we are not producing only one type, we are producing 2, 3, 4, 5 different types of product. That is called product mix combination. We have quantity manufactured and sold 1800, or quantity to be produced and sold 1800, 3000 and 1200. We have a selling price available for each and every product. We have direct material requirement, direct labor requirement, variable overheads directly given on per unit basis. Then you have material cost per kg, labor rate per hour, plus you have been given the capacity max to max 4000 of A, 5000 of B and 1500 of C can be produced. All the three products are produced from the same direct material using the same type of machines and labor. Direct labor, which is a key factor, is limited to 18,600 hours. Key factor. Now what do you mean by key factor? Key factor means limiting factor. Key factor means limiting factor. Limiting factor means when you have available resources, when you have resources, unlimited supply of resources, you can think of using resources the way you want. Okay, but when you have limited resources, those limited resources must be used in such a manner. Those limited resources must be used in such a manner that your maximum profitable product must be produced to the maximum extent, followed by second profitable, followed by the third one. So if I'm dealing with A, B and C, and suppose my C is highly profitable, I will first complete production of C. If A is having a secondary priority, I'll go for A, and if some time is left, I will use that time for B. So if highly profitable product is C, followed by A, followed by B, available resources, available time will be first utilized for C. Once the entire production of C is done, I will start with the production of A, and thereafter if I have some time left with me, then I'll go for B. If not, then fine. Of course, there can be a minimum quantity of B as well. So only that much will be produced. Balance entire production will be done. Balance entire resources will be used for the second profitable one. Basically, you're trying to optimize your profit. Basically, you're trying to maximize your profit with the available resources. So the question is asking us to find out combination of products. Combination of products. If the limiting factor is 18,600 hours. And then you have a next part of the question. Also calculate product mix. Also calculate product mix by considering material as a key factor, which is limited to 20,000 kgs. So we have two questions to answer. One, what is a combination of ABC if labor is a key factor? Second, what is a combination of ABC if material is a key factor? So we'll do one thing. We'll go for first part. When labor hours is key factor. When labor hours is key factor. What if we have labor hours as a key factor? Now please understand one thing. You have limited time. Utilize that time in such a manner that your highly profitable product will be produced first. That means my first priority in this question is to know which product is highly profitable. And if I want to know that, if I want to know which product is highly profitable, I will directly go for profit calculation of each product. I will find out how much is profit per unit of A, profit per unit of B, profit per unit of C. I have ABC. I'll find out how much is profit per unit of A, profit per unit of B, profit per unit of C. In fact, I will not even go for profit. I will take my decision based on contribution. Because suppose I have 100 units of A, 200 units of B, 300 units of C. I have 100 units of A, 200 units of B, 300 units of C. I change the combination. Instead of 100, 200, 300, now I have 300 units of A, 200 units of B, 100 units of C. I'm giving an example, not from the question. I'm producing 3 products A, B, C, 100 units, 200 units, 300 units. I'm changing that. Now A will be 300, B will be 200, C will be only 100. Do you really feel that will change the fixed cost? That is not going to affect the fixed cost, because fixed cost doesn't get affected because of the number of units produced and sold. Fixed cost is a period cost. So I do anything with the internal combination of ABC, I do anything with the mix of ABC, that is not going to affect my variable cost. That is not going to affect my fixed cost in any manner. Since my fixed cost is not affected, why should I consider fixed cost for the purpose of decision making? I will not go till profit. I'll take all my decisions based on contribution. So my first step here will be statement of contribution. My first step will be statement of contribution. And contribution is calculated by using sales minus variable cost formula. I think we have selling price available, 60, 55, 50. And then I will subtract variable cost per unit. In variable cost, I have material. I have material where the consumption and price both are given to me in the question. Material cost per kg, material cost per kg is 4. Material cost per kg is 4. Then I'll go for labor. Labor rate is 2 rupees per hour. Material cost per unit is 4, labor is 2 rupees per hour. As far as variable overheads are concerned, there is no much hustle, there is no much problem. You already have 7, 13 and 8. You already have 7, 13 and 8. So 7, 13, 8 per unit. So I'm not changing that. But look at your material information. 5 kgs, 3 kgs, 4 kgs is the consumption. 5, 3 and 4. That means 5 kgs, 3 kgs, 4 kgs will be consumed at the rate of 4. 5, 3, 4 is the consumption at the rate of 4. 5, 3, 4 is the consumption at the rate of 4. So material cost per unit will be 20, 12, 16. 20, 12, and 16. 1 unit of finished goods require 5 kgs. 1 kg cost you 4. That means 1 unit of finished goods cost you 20 rupees in terms of material. Similar calculation is to be done even for labor. 4, 3, 2. 4 hours, 3 hours, 2 hours. 4, 3 and 2 is the requirement in terms of hours. So naturally 8 rupees, 6 rupees, 4 rupees is going to be my labor cost. 20, 12, 16 based on consumption, 8, 6 and 4 based on number of hours. 28 plus 7. 28 plus 7. 35. 31. 28. This is going to be the cost per unit for me. Variable cost per unit for me. This will be marked as X. Total variable cost will be marked as Y. Contribution per unit will be X minus Y. So this will be 25. This will be 24. This will be 22. 60 minus 35. 50 minus 31 and 50 minus 28. This is my contribution per unit. Tell me which one is more profitable. A gives me 25 per unit, B gives me 24 per unit, C gives me 22 per unit. Which one is more profitable? Naturally our answer is A, then B, then C. But you cannot do that way. Understand one thing. What is your key factor? Labor hours. So I'm not interested in per unit calculation. I'm not interested in contribution per unit. I want to know, if I work for 1 hour, which product is more profitable? I'm not interested in knowing contribution per unit. I'm interested in knowing contribution per hour. And that is why I'm going to deduct this. I'm going to divide this by number of hours. Tell me how many hours are required for producing 1 unit. How many hours are required for producing 1 unit? 4 hours, 3 hours, 2 hours. Your labor standard requirement 4, 3 and 2. That means 1 unit of A needs 4 hours, 1 unit of B needs 3 hours, 1 unit of C needs 2 hours. That means 1 unit needs 4 hours. And if I work for 4 hours, I get 1 unit which gives me 25 rupees. So my contribution per hour is 6.25. I work for 3 hours, I get 1 unit of B. That 1 unit gives me 24. That means to earn 24, I have to work for 3 hours. To earn 24, I have to work for 3 hours. So my hourly contribution is 8. If I work for 2 hours, I produce 1 unit of C. I produce 1 unit of C. Just see that 1 unit gives you 22. 1 unit gives you 22. That means within 2 hours you are earning 22. Guys, you must have realized that whatever may be the contribution per unit, your contribution per hour gives you a different ranking. Contribution per hour gives you a different ranking. It's 1, 2, 3. my contribution per unit was giving me a different ranking, but my limiting factor is time. My limiting factor is time. If my limiting factor is time, time should be the base. 1 unit needs 4 hours. 1 unit needs 4 hours. 1 unit gives you 25. That means hourly contribution is hardly 6.25. 3 hours give you 1 unit, which gives you 24 rupees. So hourly contribution is 8. 2 hours you simply work for. You can produce 1 unit of C, which will give you 22. So 11 rupees per hour is your contribution. So your ranking is C, B, A. So heading method change statement of contribution and ranking. Statement of contribution and ranking. This is my first table. If I'm running short, I should be having information about profitability of each product. For profitability, I'm not going for profit, I'm going for contribution, because since my fixed cost is going to be the same, I can take all my decisions based on contribution rather than relying on profit. So contribution per unit. But since time is a key factor, instead of focusing on contribution per unit, I started focusing on contribution per hour, and I've got a different thinking. Now I'll go for statement of optimum mix combination. Optimum means the combination that maximizes your profit. So I'll go for type of product, I'll go for quantity to be produced, then I'll find out number of hours required per unit. That will give me information about hours utilized. C, B, A is my requirement, if you recollect, and that is the order. C, B, A is my requirement, and that is the order to be followed, because highly profitable, then second one, then the third one. So if I have time as a key factor, I will utilize my time in such a manner that my major time is devoted for C, then B, and then if time permits, I'll go for A, because there is no restriction on minimum quantity of A. Question is not telling you, okay, so much of units you have to produce. In that case, I would have first produced that. There is no restriction on A. So first priority C, second priority B. If time permits, I'll go for A. Correct? So how many hours are available? What is the key factor? 18,600. Okay. 18,600 hours are available. Yeah. So finally we have got to know, this is the ranking, this is what we have. Look at the question. You plan to produce 1,200 units of C. You plan to produce 1,200 units of C. You plan to produce 1,200 units of C, but you can produce and sell 1,500. What would you prefer if C is your maximum profitable product? If C is your maximum profitable product, will you be happy with 1,200 just because you planned for it? Or if you can go for 1,500, you should grab that opportunity. What should you do? Naturally, if I can sell 1,500, I will produce 1,500. If I can sell 1,500, I can produce 1,500. But for producing 1,500, I need 3 hours. Product C requires 2 hours. So I will need 2 hours. 1500 budgeted quantity doesn't decide anything, boss. I planned for 1200, but when I realize that C is highly profitable and I can sell 300 units more, I should grab the opportunity. So 1500 units will be taking your 3000 hours. Now I cannot go beyond 1500 because I'll not be able to sell it. My next quantity will be of B. Naturally B is second profitable product. So B may, I can produce, I plan to produce 3, but I can produce 5. So why not utilize the opportunity by producing 5? 1 unit of B requires 3 hours. So 15,000. 1 unit of B requires 3 hours. So 5,000 units will take 15,000. Now see, you have still 600 hours left. You still have, C, B, A. You have 600 hours left. Balancing figure. 1500 units will take 3,000 hours. 5,000 units of B will take 15,000 hours, and this will be 600 hours are still available with me. Why not utilize 600 hours for A? Why to waste time there? I need 4 hours to produce 1 unit. If it is A, I need 4 hours to produce 1 unit. So with 600 hours, I can produce. With 600 hours, I can produce 150 units. Why to leave that opportunity? In 600 hours, at the rate of 4, I can still produce 150 units. So 6,650 units can be totally produced. So if I want to maximize the profit, if I really want to maximize the profit, this is what I'm supposed to do. If I want to maximize the profit, this is what I'm supposed to do. In my first part, question is asking me to go for most profitable product mix and a statement of profitability. Statement of profit. I would prefer solving it there. Statement of profitability. Now you're starting with statement of profitability. That does not mean you should start with sales. You can always opt for contribution as a stage to begin with. I have product A, product B, product C with respective quantity. Please don't pick it up like this. It has to be A, then B, and then C. Maximum units of A and B and C are produced. Still I was left with some time which was given to A. Guys, understand one thing. A is not a loss making, but profit of A is comparatively less. So don't assume it to be a loss making one. Acha, I already have contribution per unit. 25, 24, 22. So 150 into 25, 3750, 1,20,000. $156,750. So 150 into 25, 5,000 into 24, 1,500 into 22, 33 plus 120 plus 3750. Now I'll simply subtract fixed cost from this. Starting you have per unit rate given for fixed cost. How much is that? 10, 10, 10. Your fixed cost per unit is 10, 10, 10 for all three products. And naturally your fixed cost, if it is given in terms of per unit, it has to be based on budgeted calculation. How do you find out fixed cost per unit? How do you find out the absorption rate that you calculate? It's budgeted overheads upon budgeted quantity. So you already have your budgeted quantity with you. How much is your budgeted quantity? Look at the question. 1800 of A, 3000 of B, 1800 of A, 3000 of B, and 1200 of C. If you see the quantity structure, it is given specifically A, B, and C. So your budgeted quantity is 6000 into 10 per unit is a fixed cost given. So that comes to 60,000. So 96,750 is the profit, and trust me, this is going to be the maximum one. Guys, I hope you understood fixed cost calculation. Your fixed cost is given to be 10 per unit in all three. Your fixed cost is always, if it is per unit, it is always calculated based on budgeted output. Your budgeted output was 18,3, 4,800 plus 2, 6,000. So 6,000 into 10. That means the total cost must have been 60,000, which is divided by 6,000. That's why it comes to 10 per unit. So 1,56,750. 156,750 minus 60,000. 96,750 is your profit, and trust me, this is going to be maximum because your highly profitable products are utilizing majority time, and the balance time is not wasted. It is utilized for A, which is also a profitable product, which is also a profitable product. Is this part clear? Now this calculation was done by keeping in mind, labor as a key factor. Have a glance on this so that we can begin with the next part. Have a glance on this so that we can begin with the next part. So, now, what is the next part of the question? Your next part of the question says that material is a key factor and you have 30,000 kgs of material available. 30,000 kgs of material is available. That means material is a key factor. Okay, that means I'm starting with a different calculation. This is point number 2. When material cost, or when material is a key factor. When material is a key factor. Again, material is a key factor. If material is a key factor, that means you have to restrict your quantity in terms of material. That means your entire calculation should be now done from the material perspective. And material perspective means, again, I'll have to find out the most profitable venture, but from material perspective. So I have selling price once again, I have contribution once again per unit, but I will not rely on this, you know that. My limiting factor is material. So I will first find out how much is my consumption per unit. My consumption per unit is 5, 3 and 4 kgs. 5 kgs, 3 kgs and 4 kgs. My consumption requirement is 5 kgs, 3 kgs and 4 kgs for each unit of ABC, which will help me out in finding out contribution per kg. 5 kgs I consume, I produce 1 unit. That 1 unit gives me 25. So 5 kgs give me 25, that means per kg it is 5. 3 kgs I consume, I get 1 unit of B which gives me 24. That means per kg is 8. 4 kg, if I consume, I get 1 unit of C which gives me contribution of 22. So 5.5. 22 divided by 4, 5.5. Array, that means per unit can't be the base. Limiting factor is kgs. So per kg 5.5. 8 and 5 will be the base. So my ranking will now be 1, 2 and 3. So it is BCA now. My ranking is going to be BCA. So let me prepare another statement. Of optimum mix. Let me prepare another statement of optimum mix. I have different types of products to be recorded. Then I have quantity to be recorded, consumption pattern, material consumed. Standard format again. Statement of optimum mix. Type quantity. This time I'll go for kgs per unit, and that will give me total kgs consumed. It might be 1, 2 and 3 in terms of per unit. I'm not relying on that because my consumption pattern is most important one for me. 5, 8 and 5.5 per kg is the base. So 1, 2 and 3 is my ranking. So B, then C and then A. Okay. How much is the total material available? 30,000. How much is the demand for B? 5,000. How much you have decided? 3,000. Will you still be stuck at 3,000 or you will start producing 5? Naturally, if I get more profit, I would go for B, 5,000 units. My consumption requirement is 3. That means my 15,000 hours will be first utilized for B. My next requirement is C, and I will not look at budget, I will look at actual capacity. 1,500 can be sold. 4 kgs is a requirement. 6,000 kgs will be utilized. So 15 plus 6, 21,000 kgs are on, 9,000 kgs are left with me. 9,000 kgs are left with me. Max to max, 4,000 units of A can be produced, but the consumption will be 20,000. I don't have that much. Never mind. Kgs information is available. So 9,000 9,000 kgs divided by 5 kgs per unit. This will give me 1800. So I will not produce and sell all 4,000 units. I will be restricted to 1800, 33 and 5, 83. So 5,000 of B, 1,500 of C, 1,800 of A, 8,300. So if material is a key factor, till here your calculation is same, but contribution per unit kept. Start focusing on the limiting factor. Your limiting factor is not number of hours, your limiting factor is kgs. So start focusing on kgs. 5 kgs, 3 kgs, 4 kgs give me so much. 1 kg gives me 5, 8, 5.5. So first, second and third. Maximum quantity can be produced and sold for B and C. 5,000 of B, 3 kgs is requirement, will consume 15,000. 1,500 of C at the rate of 4, 6, 1,500 kg, 1,500 units at the rate of 4, 6,000. 21,000 is consumed. I still have 9,000 kgs left with me. Okay, utilize for a loss making thodi hai. Profit is little less as compared to first two, but even this is a profitable one. 1 kg, 1 unit requires 5 kgs. Okay. So 9,000 kgs में से 5 के हिसाब से 1,800 is going to be the quantity to be produced. So naturally my statement of profitability, which will again begin with contribution, but this time definitely my quantity structure is different. So my profitability will also be different. 1,800, B 5,000, C 1,500, 25, 24, 22. $1,800 into 25, 45,000. This was already 1,20,000 from the previous calculation. And 33,000 was also available. $1,98,000 is your total contribution minus fixed cost. We have already shown the calculation in the previous statement of profit. So if I subtract 60,000, I'll be left with profit. This will be my profit if material is a key factor. That was my profit if labor was a key factor. Of course, profit figure will change because quantity is different. Quantity is different because my perspective is different. I'm not focusing on labor as a base anymore. I'm considering material as a base. So my time was utilized in a much productive way. This time my quantity of material is utilized in a much productive way. So contribution per unit divided by key factor gives you contribution per key factor. That is a basis of ranking. That gives you the answer like this. That gives you answer like this. Next question. Question number 4. Mega company has just completed its first year of operation and the unit cost on a normal costing basis are as under. Direct material 4 kg at the rate of rupees 4. Direct labor 3 hours at the rate of rupees 18. So can I say material cost is 16 per unit in terms of finished goods, and for finished goods you need labor worth rupees 54 per unit. Variable overheads again 12 per unit, fixed overheads 18 per unit. Guys, you already have fixed cost per unit, which is based on 3 hours. So can I say fixed overhead absorption rate is 6 per hour or 18 per unit, because this is a normal calculation given to you. You also have selling and admin, variable 20, fixed 7,60,000. During the year, the company has the following activity. Units produced 24,000, units sold 21,500. Units produced 24,000, units sold 21,500. Unit selling price is 168, direct labor hours worked 72,000. Actual fixed overheads were 48,000 less than the budgeted fixed cost. Budgeted variable overheads were 20,000 less than the actual. Company used an expected actual activity of 72,000 direct labor hours to compute the predetermined overhead rate. That means your overhead absorption rate is based on 72,000 hours. Your hourly rate is given to be 6 rupees. I'm talking about fixed cost. Compute the unit cost and total income under absorption costing and marginal costing. Basically, they have asked us to find out cost per unit and profit under absorption as well as marginal. Under over absorption is also asked, and then we are supposed to reconcile difference between income under absorption and marginal. See guys, absorption costing and marginal costing, it's a quite different calculation to be presented, because when it comes to absorption costing, you need to consider fixed cost also as a part of decision making. So you don't rely on contribution, you basically rely on profit. You don't rely on contribution, you basically rely on profit, and since you rely on profit as well as fixed cost both, you can easily follow cost sheet format. You can easily start with cost sheet format. So I'm first going for statement of profit as per absorption costing. And if I'm going for absorption costing, I should follow cost sheet format. This is my inner column where I'll write all my workings if needed. My cost sheet always begins with quantity manufactured and quantity sold. I think we have that information available. 24,000 units, 21,500 units, 24,000 units and 21,500 units. The basic difference between absorption costing and marginal costing is, in absorption we do consider fixed cost. So don't try a new stunt. Simply follow cost sheet format to get your cost calculation done. Simply follow cost sheet format to get your cost calculation done. I have the entire structure given to me. Quantity manufactured 24,000. Now I'll go for a working note to know the quantity structure properly. Is there any opening stock given of finished goods? No. I have produced 24,000. I have sold 21,500. Now there is no opening stock. 24,000 I produced, but I could sell only 21,500. That means balance 2,500 must be your closing stock of finished goods. We must know that because we need to value the stock later. We must know this because we need to value that stock later. So, there is no opening stock, but there is a closing stock to be recorded. Let's go for cost sheet format. The first thing that we write in cost sheet is raw material consume 16 per unit. So $384,000. Direct wages 54 per unit. $12,96,000. I get prime cost here. Sixteen lakh 80,000. 70, which is prime cost. Then I have factory overheads. Variable. My variable structure is given. My variable structure is given at the rate of 12, but there is some information given. 24,000 units multiplied by 12, that is fine. But there is something mentioned about factory overheads, and what is that? Your variable factory overheads were 20,000 less than actual. Budgeted were less than actual. Budgeted were less than actual. Matlab this is less than actual. That means your actual has to be 20,000 more. Your actual has to be 20,000 more 20,000. So this will be 3,08,000. Can I say this is nothing but under absorption which is adjusted? Your actual is more than budget. You thought of this, question says this is 20,000 less, that means actual must be 20,000 more. So divided by 24,000, if you do, $12.83 is what I'm supposed to take. Then I have fixed cost, and we all know that fixed cost is always absorbed. Fixed cost is always absorbed. Read the last line of the second last paragraph. 72,000 direct labor hours were considered to determine absorption rate. That means that absorption rate is based on number of hours. 24,000 units. If you look at number of hours, 24,000 units should have taken 3 hours. So 72,000 hours multiplied by 6. 72,000 hours multiplied by 6 per hour. This is 72,000 into fixed overhead hourly rate 6, 4,32,000. There is one more way out. You have fixed cost per unit 18. You have fixed cost per unit 18 multiplied by 24,000 units. It will give you the same answer. Since they told me that overheads are based on number of hours, I am applying this. You can go for alternate presentation also. You can even go for alternate presentation as well. 24,000 into 18. It's one and the same. Question further says something. First paragraph immediately after the box immediately after the table. Actually is 48,000 less than budgeted. Actually is 48,000 less. Actually is 48,000 less. So 432 minus 48,000. 3,84,000. 3,84,000. You have incurred this much. You have absorbed this much. That means I think it's a case of over absorption. It's a case of over absorption. It is a case of over absorption. We have shown that calculation also. In case of variable, my actual was more. That means budgeted was less. So I absorbed less. I recovered less. Okay, so I just did it. In case of fixed, my actual is less by 48,000. Okay, that means that I have absorbed more. So it's a case of over absorption. So 384 divided by 24, 16. So 384 plus 308 plus 16,80,000. You will get gross factory cost. You will get gross factory cost. Now it is 23,72,000. Trust me, after gross factory cost you write WIP and all, which is not given. So the same thing will also be called as factory cost. Same thing will also be called as factory cost. And there is no admin overheads to be added here because admin is given with selling. This itself is my cost of production. This itself is my cost of production. So this will be divided by 24,000, 98.83. $98.83. Any doubt here? So 16,80,000 plus 3,08,000. 16,80,000 plus 3,08,000 plus 3,84,000 gives me 23,72,000. That is my cost of production. And if that is my cost of production, before I start with cost of goods sold, I need to go for closing stock valuation of finished goods. As per working note 1, I have realized that I have 2,500 units. Working note 1 says that. And we all know that in the absence of information, we follow FIFO method. And whenever we follow FIFO method, my stock is to be valued at current year's cost of production. If I follow FIFO method, my opening stock will be consumed first or will be sold first. In this case, if it is a finished product, my opening stock will be sold first. So that means whatever closing stock I get at the end of the year, that has to be out of current year's production. So it is valued at current year's cost of production. See, in this question it doesn't matter because we don't have opening stock. So jo bhi bacha hai, that has to be out of 24,000. So it will be directly valued at 98.83. It will be directly valued at 98.83. 23,72,000 was the total cost of production. 98.83 is per unit cost of production. 247,075. 247,075. Now that is mainly because I adjusted over absorption here. You have one more opportunity, you have one more method of charging under over absorption or adjusting under over absorption. There was another possibility, there is another variation available where you can skip this part, take 432 here, get your cost of production, value your stock at that cost of production, value your stock at that cost of production, get your cost of goods sold, add selling and distribution, find out cost of sales, and you can then subtract 48,000 before you calculate profit. That is followed by ICI in the study material. So that solution you already have there, that presentation you already have there. I'm just showing you the other way of managing this. This is called supplementary rate. This is called supplementary rate. I adjusted it. I adjusted 48,000. That means my stock is taken at an actual cost structure and not the absorbed one. Guys, I have adjusted 20,000, I have adjusted 48,000. That means this is not my budgeted figure. This is my actual figure. That means my stock is valued at actual cost, which is quite logical because you want actual profit at the end of the year. So this 23,72,000 minus 247,075, 21,24,925. 21,24,925. 21,24,925 divided by 21,500. Naturally, it has to be 98.83. Because this is valued at 98.83, this is at 98.83, so naturally your cost of goods sold will also be valued at 98.83. And now after this I'll go for selling and distribution overheads. I will go for selling and distribution overheads. If I go for selling and distribution overheads, okay, I will write it as selling and admin because that is a word used by them. So variable, how much is variable portion? It's 20 per unit. Now since it is selling and admin, it is related to quantity sold. Since it is selling and admin, it is related to quantity sold. So 4,30,000. When I multiply 20 by 21,500, and as far as fixed is concerned, please don't try any stunt. We don't use selling and admin fixed cost for absorption. So 1760 right away. So 760 divided by 21,500. 7,60,000. I think 7,60,000 is the cost. That will be divided by 21,500. That comes to 35.35. 35.35. That is fine. So 7,60,000 plus 4,30,000. 7,60,000 plus 4,30,000. 11,90,000 is your selling and distribution cost. That will be added to 21,24,925. 33,14,925. See, from this stage onwards, we start considering quantity sold because we have already separated closing stock. We separate closing stock, we are in quantity sold. So everything is related to quantity sold. 154.18 is my cost of sales. Since I have already adjusted under over absorption, I will not go for any adjustment. I'll simply leave one line for profit and I'll first write down sales. Acha, selling price is 160. I think selling price is given to be 160. Hanji, 168. 168. Selling price is given to be 168. So 168 into 21,500. 36, 12, 000. 33, 14,925. 297. 297,075. 297,075 will be your profit. Just a formality, 13.82. I'm not supposed to rely on that. Have a glance on this question, this part of the question now. Have a glance on this part of question now. Is it done? That's the most important part now. Now, this was as per absorption costing. As I told you, if you don't give effect of closing stock here, under absorption, over absorption here, you have one more option, you have one more variation to be shown. Instead of showing it here, you show 432 here, get your stock valued, and subtract 48,000 later on, or add 48,000 later on if there is under absorption. If this is over absorption, subtract 48,000 later on. That part you can always do. So that is also accepted, this is also accepted. That presentation you already have, that methodology is already given in the study material, ICI study material. So I'm showing you the other way of doing it. This is supplementary rate only. I'm adjusting my overhead. See, if I do that, this will be absorbed. This will be absorbed, and my stock will be valued at absorbed figure. Here, my cost is already at actual level because I adjusted under over absorption. That means my stock is also valued at actual cost. My stock is also valued at actual cost. This is what I have. So this is as per absorption costing. Now, the next part will be profit statement only, but with the help of marginal costing technique. Profit technique only with the help of marginal costing technique. So let us now begin with marginal costing technique. So marginal costing. Now if you want to prepare profit statement as per marginal costing, the same standard format you are supposed to use which you were using in marginal costing. Statement of profit, marginal costing, total per unit. And since we are concerned with profit and quantity, profit and sales and all, we need only quantity sold. We are not preparing a cost sheet here. The format is very simple. It's sales 168, 21,500 if you sell, you will get 36 lakh 12,000 minus variable cost of sales. Now for variable cost of sales, I would prefer going for a working note, which will be second working note for me. See, in cost sheet we any which ways find out cost of sales. We'll find this out later. If I subtract variable cost, I'll be left with contribution. From that contribution, I need to subtract fixed cost. And boss, I have a fixed cost bifurcation. My production fixed cost. My production fixed cost is 3,84,000. My selling and admin fixed cost. My selling and admin fixed cost is 7,60,000. That means my total fixed cost is 11,44,000. Contribution will be termed as A, fixed cost will be termed as B. 384 plus 760, 1144. If you subtract from contribution, you will be left with profit. It's not a big deal. This is what I'm supposed to do. Now for this, we need to find out variable cost of sales. Remember, if you follow cost sheet format, you get cost of sales. So if you want variable cost of sales, follow the same format without considering fixed cost, and your work is done. I'm going for working note 2, statement of variable cost of sales, where I have total and per unit. 24,000 units were produced. 21,500 units were sold. Simply follow the cost sheet format, but consider only variable cost. So, raw material consumed is always a variable portion. 16 per unit, 3,84,000. 16 per unit, 3,84,000. Direct labor 54, 12,96,000. Prime cost 16,80,000, which is 70 per unit. So far I have not added any fixed cost, and I'm not supposed to, because I want variable cost of sales. Now I'm going for variable factory overheads. Without any confusion, I can pick up the information directly from my earlier part of the calculation. I already have this with me. Variable factory overheads are 3,08,000. I can use that figure here. That comes to 12.83. Variable cost of sales is available. And now I need to get the total. $16,80,000 plus 3,08,000, 19,88,000, 82.83. That is my cost of production. Now we all know that no factory cost and gross factory cost is required to be written. We don't have WIP. We have discussed that earlier. I'll simply reduce value of closing stock of finished goods, which is 2,500 units, and we all know that closing stock gets valued at current year's cost of production. The way we did here, the same thing will be done even in case of marginal 82.83. So 2,500 into 82.83, 207,075. 207,075. If I subtract this, I'll be left with 17 lakh 80,925. If you divide this by 21,500, again your CPU remains same because everything is valued at the same cost. So this was your variable cost of production. So now you will get variable cost of goods sold. If this is variable cost of goods sold, I will have to add variable selling overheads. I wish to add variable selling overhead which is available at the rate of 20 per unit. 21,500 units are sold. So 4,30,000, 22,10,925, 102.83. This is going to be the total cost of sales. In fact, this is variable cost of sales. This is your variable cost of sales. So, $22,10,925, 102.83 is what I have, which will be subtracted from sales to give me 14,01,075 as contribution. $65.17. Acha, 14,01,075 minus 11,44,000 will give me profit 257,075. 257,075. 257,075. So the next part is asked in the question about reconciliation. See, what was your point number 1? Compute unit cost and total income under absorption costing, marginal costing. That part is already given. Unit cost is already calculated. Unit cost is already calculated. You may present a budgeted unit cost like 16 material, 54 labor. This as variable overheads, and instead of taking 16, you may take 18 as your budgeted absorption rate. But this is also unit cost only. This is actual unit cost. as per standard as well as marginal. And now we are supposed to find out under over absorption of overhead is also presented, under over absorption is also presented, so nothing else is required to be done for that. And finally they have asked us to reconcile. Finally they have asked us to reconcile two statements. Now what do you mean by reconciliation? Reconciliation means you basically find out reason for difference between two figures. Reconciliation means you basically find out reasons for difference between two figures. Now my profit 297,075 is not tallying with 257,075. There is a difference. Now we need to find out that difference. We need to find out that difference. So now reconciliation is asked. Now reconciliation means trying to find out reasons for difference between two figures. My profit as per absorption costing is 297,075. My profit as per marginal costing is 257,075. Now it has to be due to three factors. One, something is written in absorption but not in marginal. Something is written in marginal but not in absorption. And the third one is something is written in both but at different values. Possible? Okay. I'll tell you how. You see the cost structure. If you see the cost structure, my material, labor, variable overhead. Material, labor, variable overhead was recorded in both standard as well as marginal. 3,84,000, you may feel that we have not written that in marginal, but boss, we have taken that also into consideration in marginal costing. Then we have also considered 4,30,000 variable portion of selling and distribution and 7,60,000 fixed portion of selling and administration. That part is already done, guys. So nothing is left. The only factor, okay, sales 36,12,000, 36,12,000, guys. That means cost structure is properly recorded. The only factor which is recorded at different value was closing stock. Here it is 247,075. It's 247,075 in absorption, but it is 207,075 in marginal. So the difference is 40,000. So that is the reason. Now understand. Technically, absorption costing and marginal costing profit must be at par. Technically, both are maintained for the same company doing the same business in the same year. So technically, profit should be same. Now, closing stock, something that is written on the credit side, is more in absorption. Closing stock, something that is written on the credit side, is more in absorption. That means credit side of absorption is heavier than credit side of marginal. That means profit, income in absorption is more. Profit in absorption must be more than marginal. If I'm starting from absorption, I need to subtract closing stock of finished goods 40,000. Automatically I'll be getting 257,075. Had there been opening stock, I would have added, because opening stock gives you impact of an expense. We have discussed that in the classroom. I'm sure it is done at all branches. So this is not something new. I'm just revising it. I'm just revising this. Is this part clear? So, started with absorption at marginal. Closing stock difference is to be subtracted because that is the only reason for. That is the only reason for difference in two profit figures. So that was the end of this question. That was the end of this question. So we discussed two more important questions, two more important concepts in last two questions. One was the key factor, and the second one was the difference, basic difference between absorption costing and marginal costing. Now let's have a glance on the last question of marginal, which is again a calculation based. Question number 5. Question number 5. Plant A, plant B. Concentrate. The particulars of two plants producing an identical product with the same selling price are as under. Plant A, plant B, two types of plants. Capacity utilization 70%, 60%. They are not at par. They are at different levels. Sales 150 lakhs, 90 lakhs, 105 lakhs, 75 lakhs. Fixed cost 30 lakhs, 20 lakhs. It has been decided to merge plant B with plant A. It has been decided to merge plant B with plant A. The additional fixed expenses involved in merger amounted to 2 lakhs. Required. Find the break-even point of plant A, plant B before merger and the break-even point of the merged plant. Okay. And also find out capacity utilization of the merged plant to get an overall profit of 18 lakhs. Merger. The most important point you must understand here is you cannot merge two different plants at two different levels. So if you want to show the merger has to be done at a common level. The merger has to be done at a common level. So I'm going for two plants and plus I'm also going for the merged one. I'm also going for the merged one. I have plant A, I have plant B, and then I'll be going for merged plant. Statement of merger. Capacity utilization. A is at 70%, B is at 60%. You have two options, but you have to execute any one. B 70, B 60, B is 60, A is 70. You can merge them. So either keep A at 70, convert B from 60 to 70, merge them. Or you take B, if you take, you can also go for A to be constant, convert B from 60 to 70, merge B को constant रख के you can merge A by converting it. That means A from 70 to 60, B is already at 60, merge them. Second option, B from 60 to 70, B from 60 to 70, this is already at 70, merge them. What we'll do is, we'll go for B. ऐसा कोई compulsion नहीं है. that we have to go for B. But there is one compulsion, they have to be at par. So, sales minus variable cost will give me contribution minus fixed cost profit. A is already at 70%, it will remain at 70%, so no change. 150 lakhs. Variable cost 105 lakhs. 45 lakhs. Fixed cost 30 lakhs. Naturally, my profit is going to be 15 lakhs. Correct? B. Plant B. Sales. At 60%, it is 90 lakhs. So at 70%, how much? So the cross, if you do the cross multiplication, you will get 105 lakhs. Naturally, variable cost will also be different. At 60%, it is 75. At 70%, how much? It is 7.5. 87.5 lakhs. That means 87 lakh 50,000. So 105, 17 lakh 50,000 will be the answer. Fixed cost is that cost which remains same irrespective of change in the quantity. So there is no change in the fixed cost. Baki, this is as per working note 1. Conversion. That means there is a loss of 2,50,000. So I cannot write only profit now. Earlier I did not know that. I mean, that's what you're supposed to understand, because in the examination you will not be having that figure with you. Now let's go for the merger. A is at 70%, B is at 70%. The merger will be at 70%, not at 140. Both will start working at 70%. $255, 192, 255 minus 192, 62 lakh 50,000. 30 lakhs fixed cost, 20 lakhs fixed cost. So 30 plus 20, 52. Pagal ho gaya hai? No, they have clearly told you there is an additional fixed cost of rupees 2 lakhs. There is an additional fixed cost involved of 2 lakhs in merger. So 30 plus 20, 50 will be there plus 2 lakhs. That will bring down my profit. at 10,50,000. So this will not tally. It is 15 lakhs minus 2,50,000. 12,50,000 minus extra expense of 2 lakhs, bringing down my profit further at 10,50,000. Now they have asked us to calculate break-even point. Naturally, we do not have any contribution per unit, so we have to calculate only value. We'll write formula just once. Now we don't have PV ratio and there is no point in calculating unnecessary PV ratios. We can directly do the calculation since we have the data. Plant A, fixed cost upon contribution into sales. Plant B before merger or after merger, this relationship remains same. This relationship remains same. Absolutely doesn't matter. So even if you go for this calculation, your answer will remain same. But in order to avoid any possible confusion, I'm going back to my original data. Fixed cost is 20 lakhs. Contribution will be 90 lakhs minus 75 lakhs into 90 lakhs. So 20 lakhs upon 15 lakhs into 90 lakhs will give me the answer. And finally, merge plant. 52 lakhs fixed cost upon 62.5 lakhs contribution into 255 lakhs sales. So we'll apply formulas now. 30 into 150. So this will be 100 lakhs. 20 upon 15 into 90. 120 lakhs. $52 into 255. 212.16 but lakhs. 52 divided by 62.5 into 255. Acha, by the way, let's analyze this one. Plant B. What if I go for this? 17.5 contribution. So 20 lakhs divided by 17.5 into 105. You are still getting answer as 120. Your break-even is an outcome of fixed cost and PV ratio. Your PV ratio is based on sales and variable cost. That relationship is same. Fixed cost is also the same. No change in PV ratio, no change in fixed cost. Your break-even will also be the same. But I just wanted to avoid the confusion, so I went for this. But I proved it on the basis of this as well, that your final answer remains. This was first part. What was the last part of the question? Capacity of the merged plant to get an overall profit of 18 lakhs. To get overall profit of rupees 18 lakhs, following should be the sales value. Required sales in terms of value will be fixed cost plus required profit upon contribution into sales. Since we are doing it for merged plant, we'll focus only on the last column. Boss, 18 lakhs profit can be earned only after recovering fixed cost of 52 lakhs. 18 lakhs profit can be earned only after recovering fixed cost of 52 lakhs. That means in any situation my contribution should be 70. My existing contribution of the merged plant is 62 lakh 50,000 when my sales is 255 lakhs. So if you see this huge calculation, you have 70 lakhs upon 62 lakh 50,000 into 255 lakhs. 2 crores 85 lakh 60,000 is your required sales. Guys, trust me, this is not your final answer. They have asked you to find out capacity utilization to get this. Chalo, that means for getting 18 lakhs profit, at least we have realized one thing. For getting 18 lakhs profit, we have realized one thing, that my sales should be 2 crores 85 lakh 60,000. Okay. My existing sales of 2 crores 55 lakhs is at 70% merger. So 2 crores 85 lakh 60,000 if I want to earn, ding ding, you will have to work at 78.4% of the capacity. Guys, understand one thing. If you stop at 2 crores 85 lakh 60,000, you will get 0. Question has not asked you required sales. Question has asked you to find out. Capacity utilization for the merged plant. So to get a profit of 18, you must earn this, and to earn this, you have to work at this level. Because at 70%, you are earning 2 crores 55. You want 18 lakhs to be earned from the merged plant. So at 70, it is 255. So if I want 285.60, how much should be the capacity utilization? That's all about merger, and actually it's all about marginal costing now. For marginal costing, again I repeat, you can go through the study material, but JKSC, if you have done, that is more than enough. Test series of JKSC is also important. All questions solved in the test series, you already have solutions. So those questions of test series, questions done in the classwork, and study material, that will be more than enough for you to crack any question that comes your way in the exam. We covered calculation based marginal costing in question number 1 and 2. Then we covered one more important concept of key factor, where we consider material as a key factor, labor as a key factor. Then we have solved a basic bifurcation, a basic differentiation in absorption versus marginal. जिसमें we discuss both the treatment, adjusting overheads through adjusting under absorption, over absorption through overheads, and adjusting it after cost of sales. I solved by one method, but I have already discussed the other method that can also be utilized later. Choice is yours, but the better one is this, because your stock gets valued at the actual cost. If you want actual profit, let your stock be at actual cost. And then the last one was this, again some different calculation. I think this one, these 5 questions, classwork JKSC and test papers JKSC, will be more than enough. If you still prefer, you can still go through study material, but you will find all questions easy. And of course, do RTP also at the end. So, all the best. Take care. Bye-bye.